Did you know that the average business owner overpays in taxes by thousands, if not hundreds of thousands of dollars? By the end of this video, I'm going to share with you the secrets that the 1% know to be able to legally and ethically pay less money in taxes. All right, and we're going to get straight into it with tip number one. One of the things that the rich know and the wealthy know is this: when it comes to the tax code, in order to change the tax, you have to change your facts. What does that mean? So the 1% understand that the tax code is literally a law, and when it comes to any type of law, it's based on the facts of the information. And one of the things that business owners and investors and people understand about the tax code is that the tax code is actually, believe it or not, a blueprint that is created for wealth. What do I mean by that? So if you look at the tax code is going to incentivize you to be able to go ahead and do the things that the government wants. Okay, so they understand that the tax code is an incentive system, and what the government wants to do is they want to increase tax revenue. How do they do that? So one of the ways they do that is by understanding that if you are a business owner, now you're able to employ people. That's one less person that they have to put on unemployment. If you are a real estate investor, that is one less person that they have to put in public housing. And if you can do what the government wants you to do, that is your biggest opportunity to save money on taxes. So one of the things that you want to make sure that you're doing as soon as possible, if you're not already, is make sure you go ahead and become a business owner, or you get into becoming an investor, because that is what the government wants you to do, and that's what's going to be able to benefit yourself and also your longevity and your legacy when it comes to your finances. So one of the first strategies that you need to be aware of is the home office deduction. The home office deduction is going to be a really powerful strategy, especially if you're just starting off in business. So with the home office deduction, you're able to now deduct a portion of your living expenses as it relates to your home. So it's going to be your mortgage interest, it's going to be your utilities, it's going to be your property taxes, homeowners insurance, and so many other things as well. And what ends up happening is that a lot of times we're doing these things and we're using these things as living expenses, but if you can understand your tax, you can literally change the facts. And that's what I mentioned before. So now, instead of just having it to be where it's a personal expense which is not tax deductible for you, now it can be a business expense, and now it's going to be able to give you an opportunity to be able to deduct more of those expenses. All right, so getting into the calculation, how is this calculated? So one of the things that you want to make sure that you're doing if you're going to go ahead and utilize the home office deduction is, one, you want to take the square footage of your total home. Okay, so once you know the total square footage of your home, you then want to identify what is going to be the space within your home that is going to be used exclusively for business purposes. Okay, the easiest way to do this is to find a room and that you're only going to use for business purposes. You could treat that as what's called your home office. So you take the square footage of that home office, take the total square foot. So let's say you go ahead and say that the total square footage of the home office is going to be 200 square feet. The total square footage of the home is 2,000. That is 10% of your home. Now 10% of all those living expenses that I mentioned before, and there's a long list of other living expenses that you can go ahead and look up on irs.gov, that is going to be tax deductible for you as it relates to your business. All right, so another method to be able to do this is the simplified method. Now, just understand this: anytime the government makes something simple for you, just know that it's not necessarily always going to be in your best interest. But I still want to share this with you just in case you are just starting off, or you want to make sure that you find an easier way to be able to do this. The simplified method is going to allow you to be able to deduct $5 for every square foot in your home office, but not every square foot. The IRS actually minimizes that, and they only limit you to 300 square feet. So what does that mean? The maximum deduction that you can now take with the simplified method is only 1,500. So again, if it's simple, it's usually not going to be in your best interest, but you do have the two options if you want to go that route. All right, moving on to the next strategy that you need to know is going to be vehicle expenses. And one of the things that you need to understand about vehicle expenses is this, okay? One of the things that you want to make sure that you're doing is you're now using that vehicle for business purposes. What do I mean by business purposes? So anytime you go ahead and drive that vehicle for business use, such as meeting up with a client, going to the office, or going ahead and buying supplies, going to a conference or a seminar, anything related to that business, it's going to now be considered a business mile for you. So now you may be wondering, how is this calculated? So one of the things that you want to make sure that you're doing as it relates to the vehicle expense is that you're recording your miles. And the reason why that is, it's going to be able to help you determine what is going to be the actual business use of that vehicle. So let's say you go ahead and you realize at the end of the year that 70% of the time that you were driving was related for business purposes. Well, guess what? Now 70% of those vehicle expenses can now be deductible for you. But the real key thing that you need to understand and figure out is which method are you going to use. And just like the home office deduction, there is an actual method and there is a simplified method. All right, so I'm going to give you the one that I believe is going to give you the biggest bang for your buck, which is going to be the actual method. Okay, as it relates to the actual method, there's actually several ways that you can go ahead and calculate it. I'm going to break down some of the most simplified ones, but again, there's a lot of different ways that you want to do this. Obviously, all of this is on irs.gov, and you want to make sure you talk to your tax professional about this. But going on to one of the first methods here is the actual method, where you're actually able to now go ahead and deduct for the actual expenses that you have for your business. What do I mean by your actual expenses? So I mean the maintenance on the vehicle, I mean the repairs on the vehicle, I mean the insurance on the vehicle. All of those up to the percentage of business use can now be deductible for you. And again, there's a long list of other actual expenses that you can go ahead and take advantage of, and that's going to be a tax benefit for you. That is if you're financing it. Also, if you're leasing it, guess what? The lease payments now up to that business percentage can now be deductible for you as well, which is like cray-cray, okay? So this could literally give you a huge tax savings for something that you probably were already going to get anyways, okay? So now it's now a tax write-off for you. It's a tax deduction, which means it's going to be a reduction in your taxable income, which means that you're going to be able to keep more money in your pocket to be able to use it the way you want to use it, instead of relying on the government to go ahead and decide how they want to use that money. All right, so now you have the actual method. One of the great advantages of being able to have a vehicle is that you're able to take advantage of what's called depreciation, and depreciation is probably one of the best tax strategies out there. And the reason why that is because depreciation allows you now to be able to take what's called a cashless deduction. What do I mean by that? So basically what that means is you are able to take a tax deduction even if you didn't necessarily spend the amount of money, okay? So going with this example, let's say you purchased a vehicle for $50,000. Even though you didn't come out with $50,000 right out of your pocket, you're now able to still take advantage of depreciation. It's going to be based on the depreciation table that the IRS has during the year, okay? And each year they change the amounts, but let's say the first year they may allow you to be able to deduct $18,000, and then the next year they have another amount, and it goes basically reduces each and every single year, because again, the first year is going to have the most depreciation. So one of the things that you want to know, making sure you're taking advantage of this and making sure that's going to be depreciated and recorded in your taxes, again, to be able to reduce your taxable income, okay? On top of that, you have another opportunity as it relates to vehicles. You are able to do what's called the simplified method, which is the mileage method, okay? The mileage method, again, is not necessarily going to give you the best tax savings, but again, it just depends on your situation. It could potentially give you more tax savings, but again, you just want to do the numbers and figure out what's going to be the best option for you. But with the mileage method, basically, you want to still record the miles during the year, but now you're able to go ahead and deduct a certain percentage or a certain amount that the IRS allows you to be able to deduct each and every single year, okay? So for, let's say, hypothetically speaking, in the current year, the amount is 60 cents. That means for every mile that you drive during the year, now you're able to deduct 60 cents. So let's say during the year you drove 10,000 miles as it relates to your business. Now you're able to have what's called a $6,000 deduction for your taxes, and that's going to be able to give you an opportunity to be able to save some more money in taxes. All right, here's a bonus strategy as well as it relates to vehicle expenses. Whether you're a business owner or not, you're able to take advantage of what's called the electric vehicle credit. What does that mean? Okay, you're now able to get a tax credit of $7,500 by purchasing an electric vehicle, okay? And the IRS has a long list of the vehicles that qualify for this specific tax credit. But if you qualify for it, one of the great things is that you don't necessarily have to wait until you file your taxes to be able to go ahead and take advantage of this credit. A lot of dealerships are actually going to give you that credit up front and save you a lot of time, and you're actually able to reduce your overall monthly payments on the vehicle with that, okay? So you want to go ahead and talk to your dealership if you're in the market to be able to purchase a vehicle. And if you've been getting value from this video so far, make sure you go ahead and hit that subscribe button and hit the like, and let's move on to tax strategy number 4 that every small business owner needs to know, and what the 1% know as it relates to tax savings is going to be business meals. All right, so as it relates to business meals, the IRS actually allows you to be able to deduct another thing that would typically be a personal expense. Now it's going to be a business expense, okay? And this is how you're able to qualify to be able to have this business meal. As a business owner, if you are conducting business and you are having a discussion over a meal, you are now able to go ahead and take advantage of what's called the business meal. So depending on the year that you're watching this, the IRS is going to allow you to be able to deduct 50% of the total cost of the meal for your business. Okay, so let's say you go ahead and you sit down with someone, you're talking about business. Let's say you're strategizing on how you can go ahead and grow your business. You want to scale your business. You want to do a potential collaboration, partnership, whatever the case is. You want to make sure you go ahead, every single meal that you have, you want to make sure that you go ahead and go out there and have it with your business bestie. Why? Because now it's a tax write-off for you. So you're able to now deduct the total cost of the meal, the tips, the taxes, all the things associated with it. You want to document the attendees there. You want to document the date. You want to document what was discussed during that meal. But if you're going ahead and doing that, then now you're able to go ahead and take advantage of that business meal deduction. All right, tax strategy number 5 that every business owner needs to understand is making sure that you're going ahead and hiring a professional, being able to hire a lawyer, CPA, a tax strategist. Those are going to be opportunities for you to be able to deduct more money in your taxes, because again, anytime you're spending money and you're investing money into your business to be able to make your business bigger, to make your business better, the IRS is going to give you a tax benefit, and being able to go ahead and invest in professional services is going to be another opportunity for you to be able to save money on taxes. All right, moving on to the next tax strategy here is going to be retirement contributions. One of the reasons why I love retirement contributions is not only are you able to save money on tax, but you're also able to build your wealth at the same time. This is the way it works. So as it relates to retirement contributions, you have what's called pre-tax contributions and you have after-tax contributions. The pre-tax contributions give you the tax savings right here, right now. But when you go ahead and pull out that money, when it's time for you to go ahead and retire, that's when you get taxed on it. But if you're looking to save money on taxes right here, right now, the pre-tax retirement contribution could be a good one for you. So you could look at such things as a 401k, the SEP IRA is also going to be a good opportunity for you. If you're a business owner, you have a solo 401k as a business owner. You also have what's called the Roth IRA. And one of the things I love about the Roth IRA is that you're able to go ahead and now contribute after tax contributions. What does that mean by after tax? So after tax means that you've already been taxed on the money, and because you've already been taxed on the money, when you put that money into the retirement account, you're able to experience tax-free growth. And that's also going to be a really powerful method for you to be able to build your long-term wealth. So if you're interested in any of those retirement strategies, you want to make sure you get with a financial advisor. Moving on to the next tax strategy, you have what's called education and training. Okay, and this is probably one of my favorite ones, and this is actually what I invest and spend the most money on as it relates to taxes. Okay, so by investing in education and training and getting coaches and mentorships, that is going to give you an opportunity not only to be able to have a tax deduction for your business and be able to help you save money at the end of the year for taxes, but also allows you to be able to really master your skill, master your craft, and become a better professional in your career and as a business owner. And one of the things I love so much about education, it's the one thing in life that you're able to receive and never lose any of it. All right, so if you love education, if you want to continue to grow, if you want to continue to excel, I recommend you go ahead and watch this video over here, and I see you in the next one. Make sure you like and subscribe. Until next time, peace.